Speak up.
Okay. Hi, my name is Shanta,
My name is Jordan Lindquist.
And I'm Jeffrey Johnson.
and today we're doing our stock valuation on JP Morgan Chase. We recommend to buy because the intrinsic value of $73.93 is greater than the stock or the current price of $65.49. So today's agenda will be going over JP Morgan Chase's background, and then we'll go over the financial conditions, the stock valuation, and then our recommendation. So JP Morgan Chase & Co. is an American multinational banking and financial services holding company. It was formed in 2000 when JP Morgan merged with Chase Manhattan Corporation. The two companies root back to 1871 and 1799 respectively. JP Morgan Chase & Co. provides capital, insight, and solution to large multinationals and emerging companies, institutional investors, and individuals. In 2014, their revenue was $94.21 billion, and their employees was 265,000. So moving on to the SWOT analysis, their strengths are they are the largest U.S. bank. They have a strong brand name, good brand visibility in the B2B segment, delivers an excellent service to customers, and their global presence of employees is 265,000. Their weaknesses are their heavy dependence on the U.S., their tough competitors, and their fluctuating markets that create unstable financial circumstances. Their opportunities are expansion into new countries, global investments, commercial banking, and diversifying portfolios. And their threats are the financial crises and unstable mortgage markets. So moving on to the organizational structure and leadership, it's led by James Dimon. He's the chairman of the board and CEO. He joined back in 2000 and has been with the company for 15 years. He graduated from Tufts University and Harvard Business School. Gordon A. Smith is the consumer and customer banking CEO. He joined back in 2007 and has been with the company for 8 years. And he graduated from the Thunderbird School of Global Management. Ashley Bacon, he is the Chief Risk Officer. He joined back in 1993 and has been with the company for 22 years. He's actually from the UK and graduated from Brown University. Marianne Lake is the Chief Financial Officer. She joined back in 2013 and has been with the company for 2 years. She graduated from the University of Reading. Matthew E. Zanes is the Chief Operating Officer. He has been with the firm since 2012 and has been there for 3 years. He graduated from MIT. And Douglas B. Pentno is the Commercial Banking CEO. He joined back in 1989 and has been with the company for 26 years. He graduated from the University of Rochester. So they've donated $210 million to nonprofits and volunteered for more than 540,000 hours back in 2013. They're headquartered in a LEED Platinum building, which is a lead platinum building, which is the highest ranked way to rank a building for sustainability. And then they aim to help cities grow and prosper in today's global economy by providing them with the information they need. So now, and before I go, I'm going to talk about the peers in the industry. So JP Morgan Chase & Co. is ranked second, with their market cap being $237 million. Wells Fargo being them out just by a little bit at $283,000 million. And now Jordan's going to talk about products and services.
Alrighty. Okay, so looking at JP Morgan's products and services between 2013 and 2014. If you look at consumer and community banking, it actually decreased by about 17% from $10.76 billion to $9.20 billion. Moving on to corporate and investment banking, that actually decreased 22% from $8.42 billion in 2013 to $6.9 billion in 2014. Commercial banking, they actually didn't really have any growth between the years, so it remained at $2.6 billion. Asset management increased of 3% from 2.13 to 2.20 billion, and then corporate increased from had an increase of 5% from 0.82 billion to 0.86 billion. And after looking at their 2014 annual report, JP Morgan stated that one thing that really did hurt them and resulted in these decreasing growth rates was the low interest rates. That was a big factor that really hurt their performance, let me state. All right, so moving on to bank ranking by total assets. As you can see, JP Morgan is number 1 with $2.5 trillion in total assets, with Bank of America just below them at $2.1 trillion. All right, Moving on to the financial condition of JP Morgan. First, we'll start with the profitability ratios as well as the leverage ratios. So net profit margin percentage, we're looking at 23.1%, which compared to peers in industry, we rated that as good. ROA percentage, we had 0.8%, which we rated at a condition of average. ROE percentage is 9.8%, again rated that as average. Debt to equity, 9.9. We said that was poor, seeing as peers in industry are around 1.5 and 1.1. Interest coverage, 2.8. Gave that a rating of average. So overall, for profitability ratios and leverage ratios, we decided to go with an overall rating of good. Okay, moving on to equity ratios and growth from year to year. PE, JP Morgan had a 12.0 PE. We said that was below average if you compare it to peers in industry. Dividend payout percentage, 29.9%. We said that was excellent. Revenue percentage, negative 2.5%, below average. Operating income percentage, 15.0%. We gave that a condition of average. Net income percentage, 21.4%. We stated that that was about average if you compare it to Goldman Sachs and industry. EPS percentage, 21.6%. Again, we gave that a condition of good. So overall, you're looking at a rating of average to good. And I will hand it over to Jeff to discuss valuation methods.
All right, so the first valuation method is the perpetuity model. Starting with our CAP-M, a risk-free rate of 2.2%, a beta of 1.8, expected market return of 8.5%. That produces a cost to equity of about 13.5%. Plugging it into the perpetuity model, we find a valuation of $43.88. That's using our EPS, our projected 2015 EPS of $5.88. Moving on to the Gordon growth model. Again, we used our cost of equity at 13% and a growth of 2%, using our earnings per share of 2015 of $5.88, produced a price of $51.60, which is considerably lower than the current stock value. The multiples approach, we project the PE multiple by the end of 2015 to be around 11.3, and for it to decrease in 2016 to 10.4. Plugging that into the multiples approach, we find a PE ratio in 2015 to make the stock value $67.77, and in 2016 it will be around $65.50. Both those values are higher than the current stock price. Finally, the discounted cash flows, we found a weighted debt to be about 60% and the weighted equity to be about 40%. Our cost of debt was about 4.6%, and our cost of equity from the CAP-M model, 13.5%. Throwing that into the WACC formula, this produces an unadjusted WACC of 8.1% and a tax-adjusted WACC of 7.3%. Here we have our earnings per share. This has grown about from 2015 to 2016 about 5%, and then from 2016 to 2017 to 18 is this value 3% right here. Using the DCF model, we used a WACC of 7.3, 8.1, and then our cost of equity at 13.5%. And we decided to stick with our tax-adjusted WACC at $88.10, which is higher than the current price of $65.49. Here is our intrinsic valuation matrix showing our high to low values for each of the four models. We decided to stick with the median column there. And lastly, our weighted stock valuation with our perpetuity, Gordon growth, multiples, and DCF stock values. And we weighted them and came up with the middle row here, which produced a value of $73.93, which is about $8 higher than the current stock price. So we recommend to buy. So your trades will be buy call options, buy put options, buy JP stock on margin, buy financial sector investment services ETFs on margin, buy call options on financial sector investment services ETFs, and write put options on financial sector investment services ETFs.
Thank you very much.